Greg, welcome back to the show. It's good seeing you again. How's it going?
Oh, Kev, it's great to be here. Honestly, I make commitments and I try and fulfill them all, but I do forget, and then I see you in 2 seconds. I'm like, oh, damn, now I remember, because I recognize your name. I actually have another friend named Kevin Jenkins, so I'm like, I know the name, but I know it's not the same name. But anyway, remind me where you're calling from, or where we're connected from again.
So I actually when we first connected, I lived in the South Florida area, in like the Fort Lauderdale, Miami area. But now I'm actually in the Dallas area now, and I know your Validus Power Corporation, I believe, is in Texas as well. So.
We have a manufacturing facility, closer to Houston.
Closer to Houston. That's good. Yeah, Texas has been really becoming a hub for just Bitcoin mining and a lot of great things.
Crazy.
So but that's where I'm at now. Are you still in Canada? Or
yes, man. I'm up in close to Toronto, but I'm going to be in Dallas this weekend. Mark Moss is giving a conference in Dallas. So my first time visiting Dallas ever will be this coming weekend. So if you're around, and I don't know where Mark Moss's thing is being held, but come on down and maybe just hang out and we'll have a talk or whatever. But anyway, let's get on with today, and we'll see how the weekend unfolds.
Yes, of course. So, I wanted to really just highlight, some of the Bitcoin conference events. I think it was just great the way they had everything organized, and even, you getting me a chance to inviting me to the Robert Breedlove and the Jordan Peterson event. I just think everything this year, which is outstanding, from the list of speakers. It would be great to just get, what were some of your takeaways this year? You actually ran a session yourself with the Billionaire Capital Allocators. What were some things that you really enjoyed out of the conference this year?
Sure, Kev. Great question. And three things strike me, okay? Remind me to talk about three things, because sometimes as you know, I can run on at the mouth. But here, the most important thing, and this ties in with my extremely lucky opportunity to be on stage with those four great gentlemen. So yes, I was on stage with four very successful entrepreneurs from around the world. Three of them happened to be South American or Latino. There was Ricardo Salinas from Mexico. There was Marcelo Clore, ex of, first of all, he was Sprint, CEO of Sprint, and then he went to SoftBank and has since gone out and ventured out on his own. But everyone should know who Marcelo is, just from the time when he ran Sprint, and then was working for one of the most powerful investors in the world in SoftBank out of Japan. And then Orlando Bravo, who is a private equity investor. He manages $100 billion of private equity funds, Kevin. You need to understand how big that is. The number itself is big, but in the context of it being private equity, it's off the charts monumental. It could be the largest private equity fund outside of SoftBank, which may or may not be defined as a private equity fund anyway. And then last but not least, and certainly not least, Dan Tapiero, extremely smart investor, started his career in global macro. As he mentioned, there's not a lot of alpha left in global macro. The global macro theme is always playing interest rates versus other risk assets. And since interest rates are close to zero, there's not a lot of buffering that takes place there. So those were the four guys I was on stage with. Little old me, and pretty nervous about it, to tell you the truth. I was pretty nervous, and it's the only video conference that I've ever watched myself in after the fact. Okay, like I won't watch this just because no disrespect or whatever, but you and I are going to be fine. If I fumble the ball on your show, well, I'm sorry about it, but it's not going to be like something that 35,000 people who are in the audience are going to see. You know what I'm saying? So anyway, I was really nervous. It went okay. The thing that really calmed me, though, is just how humble these guys are. Okay, so that's the first thing. They were humble, but that is the context of the entire conference too, all right? I didn't see anybody that was like above anyone else, okay? Like it was just a gathering of people with like-minded objectives. Generally, they are givers, okay? The Bitcoin community is awesome because it's a community of givers. And I did mention this on stage, but I'll rephrase it. I worked on Wall Street and Bay Street. I traded out of Toronto, but my counterparties were 90% of the time in New York because that's where all credit is traded out of, New York City. There is at least 95, if probably 99% of Wall Street and Bay Street are takers. So, having grown up on a very you eat what you kill type of environment, it's just really refreshing for me to get back into the giving side. And the Bitcoin community is far greater than even 80% givers, 20% takers. I don't even think there's 20% takers, which is so far off the extreme of global give and take, because even outside of Wall Street, I'd cuffed it. At least 80% of the world are takers, and maybe there's 20% that are givers. I don't think it's even that high. Point is, most Bitcoiners, and even greater than 80, if not 90% of Bitcoiners, in my opinion, are givers. And that's what I saw in the conference. So that's number one. Okay. Couple that with the fact that price was barely ever mentioned, the price of Bitcoin. Now, the conference did have a big scorecard as if, the short-term price of Bitcoin mattered, but no one cared. Everyone was talking about the greater vision. Talk to me in 5 years. This is what we're doing. Lightning, onboarding countries, building on the Bitcoin blockchain, all sorts of great stuff, Kevin. And so that's number two, okay? Price was not a short-term concern. Everyone was committed to the long-term vision. And this, I'm not talking just, the devs or the podcasters or the hosts, or everybody, absolutely everybody was buying into the vision that Bitcoin is hope and Bitcoin can change the world. All right. And then the third thing, and this is meaningful for me, I did get up on stage and I did mention that I've had my challenges with my mental health. And it's something that actually in the long run, knock on wood, I think this will make me a stronger person in having dealt with a very, very scary and very, very low point in my life. And I did mention it on stage. Now, I'm fairly open with this, but it's not something I lead with. Like, hey, look, I was suicidal for 4 years. 4 years ago, I was suicidal. But thank goodness, with the strength of my family and everybody, I made the U-turn. But I know it's in my body forever, and I just need to be careful that I don't push myself to the extreme that causes me to relapse and trigger. And it's possible, and I wouldn't say likely, but it's not a 0% chance that I do relapse. It's just the way this disease works in your body. And by the way, everybody has it, okay? I hate to say it. Everyone is susceptible to it because the fight or flight anxiety reaction or trigger is in your body, because essentially that's how humans rose to the top of the food chain, because they didn't stand and try and fight a saber-toothed tiger, okay? They knew when to run, and that anxiety was something that allowed them to survive. So that was the third thing. But, okay, that wasn't the third thing exactly. What it was, I mentioned it on stage. It wasn't scripted. It was in passing. It was how Bitcoin actually provided me with a leg of stability that allowed me to, in other aspects. What really hit me, though, Kevin, this is, not the world won't see this, but is the number of people that reached out to me afterwards and said, thank you for doing that. Thank you for sharing it. Whether they've had personal experience or just said stuff like, it takes a very open person to do something like that. It's even hooked me up with two different groups that asked me to be a spokesman on their behalf for this. So those three things, rock and roll. It was a whirlwind. I got there on the Monday. I don't even remember when it started. I guess the conference started on the Thursday.
Industry Day started on Wednesday.
Wednesday, okay. So I got there on the Monday, had a great dinner. One of my closer friends that I've met in the Bitcoin community, a great guy called Larry or Lawrence Lepard, he organized a dinner. And we all got together. And again, it was just a really good group of people, okay? And I could name all the people, but a couple of shout outs. And this is important. I need to shout out people that are so grounded and so based, okay? And this includes some people that everyone thinks they could be in the game for notoriety or whatever, okay? And I'm going to shout these people out, and people can send you the hate mail, okay? Send Kev the hate mail, not Greg Foss. But people like the crypto couple, okay? These two, Carla and Walker, are from the Midwest, USA. Solid, absolutely perfect representatives of what Bitcoin encompasses. Confident, well-spoken, young, okay? And they are just solid people. So the crypto couple, of course, I have to shout out, some of the bigger people that were there, like Robert Breedlove, okay, was at the meal. Good friend of mine, James Lavish, hedge fund guy from Las Vegas. These guys are, these guys have done some good stuff in their lives, and they hang out. Alex Svetsky wasn't there, but Alex from Swan Bitcoin and his wife, Natalie Brunel and her boyfriend. I mean, these people are up there with followers and influence, and yet they come, they hang out. We have a few drinks and laughs, talk about getting this conference going, and it was just really good. So that was the Monday night. But after that, a blur, all of a sudden it was Sunday morning, and you're like, what just happened? It was rock and roll, right? So I apologize if I'm forgetting anybody. I'll just go through my head. Oh, Mark Moss was there, of course. And then again, here's Mark Moss, a pitch for his thing this Friday in Dallas. I'm not sure when you're going to air this thing, but your podcast rather. Mark Moss puts together some amazing content, not just on Bitcoin, but just on life in general. So his conference in Dallas this weekend, I'm looking forward to that. I'm lucky enough to be a speaker. But it started this Monday night. Now, shout out to Lawrence Lepard, solid money manager, former gold bug who has converted to not 100% in gold, but Bitcoin as the better sound money alternative over gold, okay? And Larry, from his goodness of his heart, just like people, this dinner wasn't cheap, all right? I'm promising you, this dinner was a good ticket, and he puts it together and he invites people and he just says, it's on me. Just come, enjoy, talk. Anyone who I've forgotten, look, you know what? No one is bigger than anyone else. No one is smaller than anyone else there. It was just a really, really good night. Now, the problem is sometimes you take a picture of it, you snap it. No comments on how that happened, but the feedback was from some of the toxic maximalists, and that's okay. They keep everyone honest, or try to, or think they do. Who do these people think they are? There's no tiering in the Bitcoin community, and that wasn't the way it was meant, but of course, sometimes people take it that way. So try to keep it based, try and keep everything simple, and I only throw that out because I am so proud of the people that I've met from different walks of life, from different backgrounds, cultures, people from South America. I met Lamar. I've met, and I'm throwing this out for talking to some of the Black community or whatever. I've met Justin Redrick, who wrote the book. You may or may not know him. He's Bitcoin vegan. I'd met him in Miami, a prior conference with Tone Vase. And I'm just really impressed with these people, like yourself. It doesn't matter what color you are, okay? Look, if you actually ever accused me of that, I'd be ashamed that I'm being accused, that I care what color you are, what country you're from. But some people interpret it that way, and I'm really sorry. It's not the way I live my life. I don't want to be part of a community that thinks they are better than anyone else. All that we're trying to do is impart some of our experience. I'm not going to call it wisdom, but let me tell you, if it's not wisdom sitting in a chair for 30 years where you've seen the world unravel 4 times, okay, 4 sick times when you're like sick to your stomach, that the world you're leaving for your kids is going to be worse off than the world that you got brought into. That's something that I've experienced. And so what I try and do is tell people, let's try and avoid this, people. There is a new path. That path is called Bitcoin. You can listen to me if you want, but what I have is 35 years of mistakes. Okay, that's what I bring to your table, to your podcast. 35 years of mistakes. Okay, I'm not going to talk about everything that I've done. The only thing that speaks for itself is I've survived it, but I've made my mistakes. And when you make a mistake, you reevaluate, you see what you did wrong, and you try not to make the same mistake again.
Yeah, that's so true. And then I did want to tell you, you are also going on stage and talking about just the mental battles that you've had in the past. That takes a lot of strength and courage, and I do commend you for that. And I think that it was definitely it was great seeing for you to open up, and because a lot of people can relate when we go through things, holding it in. It's not really not doing anything for yourself, or nor is it helping other people. But when you can open up and share that, the transparency of that, I really appreciate you going on stage and being opened up like that. But yes, as far as the conference, I do agree with you. I think that the humbleness from all of the speakers, no one feels like they know too much. I know for myself with learning more and more about Bitcoin, just the education behind everyone wants you to learn. And it's just like you said, it's more of a giving aspect rather than taking. And I just think, like you said, a lot of the guys, Jeff Booth, Preston Syke,
Yes.
Lawrence Lepard, these guys are outstanding. Mark Moss. I just love listening to these guys because I learn so much more and more every time that I hear them with their concepts and their expertise. Now, I wanted to actually talk about within the session with Ricardo Salinas. He talked about his experience with hyperinflation in Mexico, and
Yes.
I thought it was very eye-opening how the experiences that he went through, where he talked about how his money literally went from like $200 a month, I believe he said, to like $2, and just really talking about how inflation just really eats up at your dollars and just the value of your money. So I wanted to kind of get your thoughts on what he talked about, how hyperinflation affects 2 different types of people, the people that have those 401ks, those pensions that are approaching retirement and their dollars are just dwindling down because of all of the decisions that we're seeing now with the Federal Reserve and the government. And then the other side of people that don't have any assets at all, or may not know about Bitcoin or the alternatives when it comes to just a decentralized form of money. So can you kind of talk about what he talked on with that, and what was your take on that whole experience?
Yeah, so I great question. So now I got to set up the context of how this panel came together. So I was invited to host it, and then but it was up to me, like, to try and figure out how to get these guys all on the same page. And so, here I am out of Canada, and I'm going to try and contact these 4 billionaires. All right. And you got to understand their time. This is true too, of them being on stage. Do you know that 1 hour of their time is probably worth more than the average salary lifetime of an American? The average American salary, not just per day or per year. It's probably over the lifetime of the American, how much each hour of their time is worth. When you're a billionaire, I mean, everything is multiplied by thousands, right? So now, that being said, they're very giving of their time, but that's probably the dollar value of their time. And maybe I'm embellishing, and maybe it's 10 years of the average American. Who cares? The point is, they were giving their time for free. That being said, getting in touch with them leading up to the conference proved, I said, it's like herding cats, okay? Trying to find a time where all 4 of these guys would have a time slot was next to impossible. Not to mention, none of them even responded, even through their own press or their own secretaries or whatever. It became very apparent to me that I would not get all four of them on a conference call together. We couldn't possibly find a time. So I just decided I would go out and individually reach out to them. And I arranged 4 separate calls, okay? 3 of them were on the phone, and then Dan Capiero and I, the last 2 to meet, we did it only the day before we were going on stage. So everything in my mind was in flux, how that I would introduce these guys. But then it finally all came together. And each one of them told me their individual stories, but I didn't really know how to put it together on stage until Dan filled in his what he wanted to focus on. And then I said, okay, here's how I think everything would work. And Ricardo was the perfect guy because he has experienced his own life. He experienced the hyperinflation in Mexico. And I'm going to probably make a few mistakes on this story, but here's how I remember it. He went to school in the USA, probably Harvard, but I'm not positive. Graduated from Harvard, went back to Mexico, and was earning an annual salary. Now, don't forget, when I graduated too, he graduated a couple of years before me. But you measure your salaries back in the 1980s. $2,000 a month, $24,000 US equivalent a year. That's pretty decent, okay? This is 35, 40 years ago, okay? Please understand what that meant as a salary. So he was making $2,000 US dollar equivalent, and then hyperinflation hit Mexico, and it basically, debased that by a factor of 10 so that he was down to $200 a month US dollar equivalent because the Mexican peso had lost so much value against the U.S. dollar. Okay, when he got hired at the equivalent of $2,000 U.S. per month in pesos. It wasn't being paid in U.S. dollars. He would have been really lucky to have negotiated his salary in U.S. dollar equivalents, right? Then he wouldn't have lost that. But the Mexican hyperinflation chiseled it all the way down to that price. And your life changes pretty quick, doesn't it? If your monthly income gets carved by a factor of 10. And so that's what he's lived. He brought that experience. He brought the firepower in a number of fronts. He brought up bonds, and he says, why would you own a bond? And I'm like, I love this guy because that's me right now, right? I've spent my career in trading bonds, and I think bonds are a horrible risk return opportunity right now. They have very low return, like a 3% yield, and very high risk that the price will go down because those yields actually have to rise. Now, we're heading into a month where the FOMC is coming right now, and I don't believe the FOMC is going to come close to being able to raise the overnight rate as much as they plan to. But that's the push-pull of the markets. But he crapped all over bonds. He called the U.S. dollar a shitcoin. I love it. I mean, this is a billionaire calling the U.S. dollar a shitcoin, and you're allowed to, right? Freedom of speech. It's all relative. Yeah, he was a superstar. So that's where we started. We started with that story, and then everything else sort of went from there.
Yeah, I thought that was really funny. How he talked about the U.S. dollar and, with bonds, just the negative interest rates that we're seeing now with the market in comparison. When you look at inflation and the actual yield that you're getting on a bond, it's not a smart investment when you really look at the math behind it. And I actually wanted to talk about the credit markets, because I know at the end of March of 2022, really like right before the conference, we briefly saw an inversion between the 10-year and the 2-year treasury yield. I just wanted to get your thoughts on the inversion, and also, are there any other yield spreads that you're paying attention to, such as the 5 and the 30 treasury, or even the 10-year and the 3-month?
I love your style, buddy. Okay, let me be very clear on what I've done in my life and what I can opine on with some expertise versus putting my finger in the air, or finger in the wind, it's called, and trying to judge. So I was a credit trader. So I traded high yield bonds was my actual sector within the corporate credit universe. I traded high yield bonds. So very risky. most of my concern was with credit risk, not with interest rate risk. Now, when you talk about the yield curve and the shape of the yield curve, that's interest rate risk. It's not my absolute area of expertise. But listen, when you're trading credit, you have to know the shape of the yield curve, what the yield curve is telling you about where the economy is going, because that will impact the credit quality of your instruments that you're trading. When interest rates rise across the globe, high yield is not in its own little bubble. It gets impacted by the global macro. So let's talk about the shape of the yield curve, but I need you to understand it's not where I spent my life. Although I've traded plenty and, billions of dollars of treasury bonds for hedging purposes, et cetera, it is not my primary focus. That being said, I believe it's tough to get a really good read on the economy right now because I think the yield curve in the United States, not explicitly, but is implicitly being manipulated, okay? So 2s, 10s, 10s, 30s, shape of the yield curve inversion. Right now, it's my opinion that those historic indications are not quite as applicable today because there has been a monster elephant in the room keeping yields down in the form of the Fed repurchasing their own bonds. Remember this, and this is the simplest thing I need people to take. CPI was just reported as 8.5% annual. When I started trading bonds in the 1980s, CPI, it was the last time CPI was at the level that it is today. Okay, the last time it was at 8% or higher was in the late 80s. Okay, that's when I got my start. And 10-year US Treasury yields, when I got my start, were over 10%. Why? Because they had to be there in order to provide what's called a real return on bonds over the price of inflation. Today, it's flipped. We have an 8.5% CPI and 10-year US Treasuries are still under 3%. Kevin, tell me what is wrong with that picture? Well, I will tell you that people are not correctly pricing inflation into the picture, in my opinion, because there's been a monster buyer in the market holding up prices and therefore holding down yields on these bonds. Unless you told me that the 10-year yield was where it was historically, then I'd be able to give you what I thought was a picture of what the yield curve was telling you the economy. I think the true yield curve would be showing an inversion where 2-year yields would be higher, but don't forget, 2-year yields would have to be above 10% right now to match where they were historically. They're not there. Let's not worry about the shape of the yield curve too much because, honestly, the yield curve isn't where it should be, in my opinion, from a historical level. It's an opinion. Understand your question, more importantly to me, was what other rates would you look at? And very simply, I look at credit spreads. The spread over the benchmark US Treasury yield, the spread that implies how much people are charging corporations to borrow, because corporations are more risky than the US Treasury from a default risk perspective. Therefore, they have to pay a wider spread. Those are where I've spent my life. Those spreads are canaries in coal mines. I watch them very closely. I will tell you, they are screaming. There's a little bit of fire starting, okay? It's not a full-fledged forest fire, but the tinder is dry, the forest is dry, it's susceptible to a forest fire. That's where I look. I look to credit default swap spreads. I look to high yield spreads. I look to spreads on on sovereign debt. And as you know, I've written a paper that calculates the value of Bitcoin using sovereign credit default swaps, CDS spreads, as a function of the outstanding debt to give you an intrinsic value of Bitcoin, because I think of Bitcoin as the anti-fiat, if you will. It's insurance on the impending fiat collapse. The price of that insurance is going to go higher as more countries default and as credit quality of those countries deteriorates because of things like recession and whatnot. And that's why it's a dynamic calculation of what the intrinsic value of Bitcoin is purely on that basis. But these are the spreads I've spent my life trading. They are all related to volatility. So people out there that want a good proxy for what credit spreads should be doing on a daily basis, just follow the VIX. That's the equity volatility measure, annualized option prices measured in a daily compilation called the VIX. The VIX is a really good canary in the coal mine as well. It happens to be a derivative of all these other things I've talked about. And when I say derivative, not a pure derivative, but it all trades off of this thing called a risk risk reward, or how much risk is, some people call it the fear index. That's okay. Yeah, it's fear, but volatility works in both directions. It just happens to be that the VIX tends to rise when all other markets are puking. So watch that. The VIX closed at like 34% annualized. Markets don't work. New issue markets don't work when the VIX is over 25%. Okay, it's now at 33%. New issue markets are effectively closed in the United States, which means no new capital is being raised to expand, to help the economy expand and expand the future potential of corporations, etc. I think we're heading for a pretty, it could be the bug in the windshield, okay? It could be that ugliness, but look, this is a big week. The Fed is absolutely incompetent in my mind, all right? Like, I've never seen a circus act like this. That's what happens when you get a lawyer running the Fed. Jerome Powell, he could have gone out in the limelight. I don't know why he came back for a second term. He's a lawyer. He's not that good at math, okay? He's just not. That's just not what lawyers are really good at. What he is good at is trying to jawbone stuff and, paint a picture that could or may not be absolute truth in his mind. That being said, we are in a very precarious position right now. And the guy that's in the most important risk chair in the world, that being Jerome Powell's chair, I'm not sure he's the guy with the, I don't think he has the chops. I'm not sure he has the chops to be that guy. I'm not sure who the alternatives are, and we certainly don't have some political strength in the various countries. I'm not really a fan of the political administrations in either country. Buy insurance. Be thankful that there is a form of insurance that, in my mind, is going to help rescue the world. It's not going to happen overnight. And there could be a big drawdown in the price of Bitcoin as the drawdown in other risk assets occur. Now, I don't believe Bitcoin to be a risk asset myself. I believe it to be the opposite. I believe it to be insurance. But a lot of the algos out on Wall Street are trading it as a correlated to risk assets, meaning risk on, risk off. That's a short-term thing. Try and maintain your discipline, people. Use lower prices to buy Bitcoin. Use higher prices to buy Bitcoin. The price of Bitcoin right now is an absolute rounding error in the context of where I think it should go and what it is worth. That being said, it's my opinion. I've never seen a better asymmetric investment opportunity in my entire life. That includes 35 years of managing money, 30 years of managing it professionally. And when I say professionally, it's not just managing my own net worth. It's managing money on behalf of other people. And if you actually want to have stress in your life, start managing other people's money in a market that is imploding, okay? Even if you might be outperforming your benchmark index, last month or year to date, the NASDAQ is down 20-something%, okay? 22%, I think, year to date. Imagine if you're a NASDAQ manager and your benchmark is the NASDAQ index and you go to your client and you're like, I killed it. I'm only down 15% and then my benchmark is down 22%. I outperformed by 700 basis points. Someone's going to look at you and go, you killed it? by losing 15% of my money, and you're happy that you are you, what the F is going on here? But that's the reality of managing money. Okay, Kev, it is a stinker of a job. I did it for 30 years. There are times it's when you actually don't feel so good about yourself, and then you can, fall into some of the traps I fell into. Luckily, before I became really sick, I saw the signs telling my body was telling me, you can't do this anymore, Greg. You've done it for so long. Your body is running out of fuel. And I did put my hand up in 2015 after, so I started professionally. That was 25 years. And then I actually managed money a little bit after that, which was outside of my own money. Now and I don't have a lot of my own money, but I do have conviction. I just do it for myself. And in order of priority, this is for anyone who's aspiring to be a money manager, which sounds so sexy until you actually sit in that chair. It's easiest to lose your own money. It's second easiest to lose a bank's money. You still feel like a chump, but you've lost money for a bank that has hopefully a ton of other guys making money, or, the bank itself makes money, or, they have a Fed backstop, right? So, okay, if the bank implodes, the Fed will come and bail them out. You don't feel good about it, but the third and hardest people to manage money for is your friends and family, and people who entrust their hard-earned net worth and monetary energy to you to actually protect and preserve that capital and try and provide some capital appreciation. When you lose their money, you feel like an absolute arsehole. Even if you've outperformed your benchmark, if you have any sort of heart, or you have any sort of ethical fiber, losing 15%, even though the market lost 22%, you still feel like a total chump, and it's not easy, and it wears on you. So perhaps not just perhaps, I'm certain that's what, which after 30 years of being in the trenches, it wears on you. So I put my hand up, and luckily I avoided having to manage money during the COVID crisis, because it's not easy. And I absolutely, I understand the pressure that these people have. But the people that categorically refuse to understand Bitcoin and look to its attributes, and that includes Charlie Munger, it includes people like Peter Schiff, you guys are intellectually lazy, possibly. I don't think that's the case. You guys are managing other assets that compete with Bitcoin. True. You guys benefit from the Fed backstop. In the case of Munger and Warren Buffett, there's no question that they benefit from the Fed backstop to bail out all their financial holdings when the next financial crisis comes, just like the past financial crises. So when Munger says stuff like Bitcoin is evil because it undermines the Fed, I know you can edit this, so feel free to edit this out. But if you don't, Charlie Munger, you are a conflicted old liar, because I don't think you're that stupid that you don't understand the benefits of Bitcoin. And if you are that intellectually lazy that you don't understand the benefits of Bitcoin, then you shouldn't be managing people's money anymore. Okay? That's simple. I have to call it like I see it. I am discouraged when people of his honorable track record, and I think he's been an honorable American. I don't believe he is correct in this instant. And calling Bitcoin evil is absolutely, I'll call it bordering on criminal behavior, okay? It will forever keep people who believe that the sun rises out of his arsehole, that they shouldn't buy Bitcoin because Charlie Munger says so. Charlie Munger openly praises the Chinese Communist Party. He openly praises communism. He owns a ton of Alibaba that he's lost his shirt on. I'm not sure you should view his or take his viewpoint on Bitcoin, where he praised the Chinese Communist Party for banning Bitcoin. Good Lord. This guy, maybe there's some things going on in his head that aren't quite as clear as they were when he was a younger man. I'm throwing that out there. Send the hate mail to Kevin Jenkins. via, you can copy me on it if you want. I'm just telling it like like I see it, or like it is as I see it. Okay. Wise up, people. Nobody has all the answers. All you have to do is learn from your mistakes. If you don't learn from your mistakes, you are bound to repeat them, and you will go out of business, because that's the way the world works.
Yeah, and I think one thing that I enjoy hear you when you have talked on other podcasts as far as managing risk and just money management is changing when the information changes. And I think when we look at across the board, we see a lot of manipulation with the CPI. I mean, I know yourself, but when you really look at if inflation and CPI was calculated like how it was back in 1980, we will be somewhere in double digits. And I think when we think about what you said with the manipulation with the bond yields, it brings me back to what you said during the conference of, they have to keep printing money to solve their debt problem. And it's just a constant spiral. And I think one thing that I really love that Jeff Booth talked about during his session with the Bitcoin macroeconomic landscape was that Bitcoin is the only technology where there's a system that's built peer-to-peer that doesn't require debt for the velocity of money. And that really hit a light bulb for me, because with fiat currency, it does require debt for the velocity of money. So in order for money to circulate to the economy, they have to continue to keep printing it or create incentives where people go out to spend their money. And that's where, the whole credit and borrowing comes in with CBDCs. I think that is really a way for them to increase the velocity of money. So it really opens my eyes to just the system that we live in. And I wanted to get your thoughts on that. When we talk about manipulation, when Jeff Booth talked about how it doesn't require debt for the velocity of money, can you kind of explain that a little bit more?
In there, okay? There's a ton of stuff in there. So I'm gonna break it down to the best of my ability. First of all, let's talk about the current fiat system and why I say that they have to keep printing money to solve the debt spiral. And it's as simple as this. In a debt spiral, in my definition of it, is when the economy is not growing fast enough even to meet the obligations on the interest expense. That's the contractual obligation on the interest expense. The economy, even the growth of the economy, is not quick enough to meet that interest expense, which means that the debt is growing organically just because of the coupon faster than tax revenues are being generated, which means the debt balloon is expanding organically regardless of these new $1 trillion spending packages that every government is implementing. I hope people understand that, which means they have to solve this debt spiral. How? They have to print more money. It's that simple. It's a closed loop. It's called the error term. And fiat currency is the error term in the equation. So, yes, in a debt spiral, this is Greg Foss speaking. Yes, in a debt spiral, you have to continue to print money to solve the organic growth of the debt balloon due to the interest coupon. Now, this is where things get a little less Greg Foss-ish and more Jeff Boothyism. Okay, the guy is from another planet, okay? His brain is so friggin' big, I can't even pretend to keep up with his thought process. There's so much stuff in there. But gonna try here. One thing you need to understand. In a debt-based system like our fiat system, where a bank holds only on every $100 of loans they make, whether it's to commercial real estate, whether it's to mortgages, whether it's to a corporation with no secured lending, they only a secured asset, or otherwise known as collateral. They only hold $6 of the $100. $6 is their risk absorbing equity capital. Okay, the bank's cushion. And 94 cents is depositors' money, okay? So of the $100 of loans, $94 is depositors' money. That's how banks are set up. That's called the leverage in the system. And you tell me there are not regular times when that $6 is totally vaporized because the value of the loan becomes less than $100. Things like high yield spreads expanding make bond prices go down, but they also make loan prices go down. Okay, people, you got to understand the way the world works. So that $6 is regularly vaporized. That's a problem, but it's the collateral value that the securitized part or the secured part of the mortgage, it's your house, it's your commercial real estate, it's your, hard assets that a corporation owns that you have first lien on, that gives comfort that the $6 can be repossessed if it needs to, okay? Here's the problem. In a deflationary environment where that $6 would decline in value over time because it's deflation, that doesn't work. They need inflation to preserve the value of the collateral on protecting their $6. You could argue whether $6 is the right number. I think it's low. I've spent my career in banking. Trust me that $6 compared to what it was 20 years ago is a lot better. 20 years ago it was only $3. Okay, so at least the banks have expanded their collateral base. Their capital base, because there's been regulatory oversight to expand their capital base. Doesn't matter. Deflation will make that a much more difficult circle to square, okay? Because it could be undercapitalized no matter what, whether it's inflationary or deflationary. That's for another conversation. But Jeff Booth's book and Jeff Booth's thesis, and the best book I've ever read. I'm telling you this. Jeff is a personal friend of mine, but this is the truth as far as Greg Foss is telling the truth, which I always try and do. The Price of Tomorrow, written by Jeff Booth, is the top 3 books I've ever read in my life. In fact, I put it as the top book. I took 14 pages of notes, Kevin, from reading that book. It's full. It's a treasure trove worth of stuff. Now, let's make sure you understand where I don't have experience. I told you I don't have huge experience in the measurement or the yield curve forecasting tool. I mean, I've traded billions of dollars a month. Velocity of money and the way Jeff Booth is coming at it, 0 experience. I shouldn't comment on it because I'm not sure where his big brain is going with this. I think I can chip away at various things. Yes, velocity of money is a measurement of economic activity, no question. Let me just jump to something I do know. Central bank digital currencies are nothing more than digital fiat with this one addition. Digital fiat, therefore they are garbage, with surveillance. I've just lived through an episode in Canada where Canadian bank accounts were frozen if your viewpoint on an issue that encompassed the Canadian truckers was contrary to the government's viewpoint. They froze your bank account. Well, I don't think that's a good outcome, but with central bank digital currencies, they could freeze people's ability to spend like that, okay? Oh, Foss, I see you were at a rally that was supporting cause XYZ, and I see you spent money at this restaurant that we're going to close. So we're shutting your ability to spend money because, you know what? You're a no-do-gooder, a do-no-gooder, or whatever, a go-new, whatever you are contrary to the government's evaluation of who should be able to spend money and should be able to preserve their money. This is extremely dangerous, Kevin. Jeff would agree with me on that front. So I'm going to sidestep this velocity of money thing because I'm only going to fumble the ball in the context of what he was trying to say. Suffice to say that Jeff Booth and I make a pretty good team. We're both Canadians. We make a good team, and people like when we get together because he's the diplomat. Yeah. And I am more like the bulldog, and I run into the wall. And he's the guy that taps me on the shoulder and says, okay, Foster, you don't have to run into that wall. There's a door right down here. So come on, come with me and we'll go through this door. And then you can get on the other side and you can become a bulldog again. And so I like it. He's like a calm, fatherly figure. He doesn't swear, at least publicly. I'm the reverse. Every second word is F this, F that, because I joined, I lived on a trading desk. And by the way, people, I'm a very polite bond trader now, because if you think that I actually swear a lot now, you got to go onto a bond trading floor when things are unraveling, okay? It is pandemonium. There are people screaming at each other, swearing up and down. There's phones that are being crashed. It is a bit of a circus. And why? Because people's livelihoods are at stake. There are people that lose their jobs on a regular basis because, they're sitting on shitty positions. They tend to swear. So anyway, coming back to your question, what a great question, Kevin. You're smarter than me. Jeff Booth's way smarter than me. Perhaps you guys can figure it out. I can't.
Yeah, no, it's definitely.
Yeah.
I mean, when he said it, I'm only just making an assumption of what I could think of what it could be. But I mean, it was just a great point that he highlighted. And The Price of Tomorrow is a great book, and Jeff Booth, and even yourself too, Greg. I mean,
You're the best.
two are.
Can I say one thing, Kevin? I'm sorry to jump on top of you. I am not,
when you were
as
talking,
far as engineers go, where I trained, and as far as really smart mathematicians go, I'm neither. What I know to do is to survive in a trading environment where, as you said, when the information changes, don't stick a stake in the ground and go against that info. Manage your risk accordingly, okay? You can be altruistic all you want, but you can only be altruistic if you can continue to fight the good fight. And some things you can't change. You've made a bad choice. You've made a bad investment. You got to cut bait. You got to just say, that was wrong. I have these other lines in the water. That particular line, I got to cut bait. That's a loss. Your best risk management tool is to control your losers. Let your winners run and focus on your losers. Everyone else tends to do it the reverse. They focus on their winners. They tend to sell them to crystallize gains, and they hold on to their losers in the hope that the loser will come back and you can break even on it. That's not how you manage money, okay?
Yeah, that's so true. And I actually, you mentioned it at the conference, but I briefly wanted to just touch on the Fidelity research paper with Bitcoin First. I think it was just such a great research paper on just educating people about Bitcoin, but also really hitting on the importance of why it's completely separate when you compare it to these altcoins, and how when you do the comparison, these decisions that the network has to make is they can only deliver on two of the three guarantees at one time. And those were like decentralization, security, and scalability. And it talked about how Bitcoin is the most secure, it's the most decentralized, and how just due to network effects, more investors and institutions are going to migrate to that because of just the way the network is designed. So I just wanted to get your thoughts on when it comes to Bitcoin being just a monetary good, why it really separates itself from all of these different altcoins, and how
you are becoming a student. You're not only becoming, you're passing being a student, and you're becoming the professor, okay? And I'm not the professor myself. I'm still a student too, but over time. So let's paraphrase my viewpoint of what the Fidelity paper was, and you've already done a great job. I'm going to make it even more simple. There's Bitcoin and there's shit coins. Okay, that's what the article could have been from Fidelity, although they don't swear like a tramp like I am, a trader. Okay, so there's Bitcoin and there's shit coins. True. Decentralization, you mentioned it. Strength, security of the network, correct. No other altcoin or no other digital asset solves the fiat Ponzi. Only Bitcoin. That is my words, but Fidelity would say the same thing. They just can't call it a fiat Ponzi, okay? They got to be careful. But the truth is, Bitcoin is the only digital asset that solves the fiat Ponzi, in my opinion, and I believe to be Fidelity's opinion as well. The bigger thing, though, that I think that is important. So it was a great research report.
Yeah, that's true.
Phenomenal research report. It will change the digital asset ecosystem. Why? Well, Fidelity is one of the top 4 money managers in the world, okay, in terms of assets under management, AUM. And the Fidelity report means, and I do know this, they are already mentioned they're offering Bitcoin in 401ks. Okay. They already mentioned that they're, have studied this. They've been mining Bitcoin under the tutelage of Abigail. She's been a digital asset, basically intrigued by it, etc. So they've got their feet wet for a long time. As a top 4 institutional manager in AUM, when Fidelity offers digital assets to their clients, and if you listen to Orlando Bravo on the stage that I was on in Miami, he has $100 billion fund. He has all the sovereign wealth funds in the world as clients. He says their interest in Bitcoin is absolutely exploding. So take it from a guy who talks to all of these guys. If Fidelity is the asset manager that offers this silo of digital assets, and in particular Bitcoin, if you are at a competing asset manager, so the BlackRocks of the world, the Vanguards, the large global asset managers, and you don't offer a digital silo, and all of the clients want you to offer it, think what Orlando Bravo said, you're going to lose clients to Fidelity. So what do you think you're going to do, Kev? Do you think you're going to actually study up on Bitcoin and offer a digital asset silo to your clients? If you don't, I know how this ends. And I've seen it and lived it in Canada. As Canada's first high yield bond trader, there was one account in Canada when I started. And all my other counterparties were in the United States. I would trade Canadian debt with US-based high yield funds. And the Canadians, over time, were like, okay, I'm learning about this asset. I'm learning about it. Now, every single asset manager in Canada has a high yield bond silo. But it took 20 years for them to get there. It takes time. Fidelity is going to be a leader in this space, and everybody else is going to be looking at them saying, damn, I better get up to speed. That's my opinion. But I've lived it once, and I believe that Bitcoin will be even a bigger pressure point than high yield bonds.
Yeah, I agree. I definitely think they're taking the leading role on just the digital asset side when it comes to Bitcoin, and they're definitely going to be a leading institution when it comes to being in this space. I guess just the last things that I want to ask you, Greg, is I know that you and James Lavish, you all are educating people about a lot of these different issues that we've talked about throughout this episode with the Looking Glance education. I will want to learn. You kind of just talk about that. It is all about
education. It's so important. And so, yeah, James Lavish and myself are 2 of 7 partners in a free education platform to help the world learn about stuff they don't teach you in school. Because now, I'll be honest, yeah, it shows the shortcomings of the fiat system, and we detail it, and things like inflation, things like velocity of money, yield curve, shapes of the yield curve. It's all there on a webpage called lookingglasseducation.com. Also on Twitter, at lookingglassedu. Please follow it for support. This is just announced that we put this all together, but there's 7 people. And I won't shout them out by name, but I want to show you what a global effort it is. I will shout out Seb Bunny. Sebastian Bunny is a Kiwi, so a New Zealander who lives in Whistler, Canada. He's under the age of 30. He is our de facto CEO. He's putting together all of this research. He's a serial. He's a serial mountain biker and a serial skier, but he's also a serial producer of high-quality educational content. He's our CEO, Whistler, Canada. Then the genesis was from a surgeon in Madison, Wisconsin. His name is Jason Sansoni. He had read my initial paper on bonds and why Bitcoin is the perfect hedge in a fixed income portfolio. And he didn't understand it. He wanted to get more information, try and simplify it. So he was the genesis. So there's Seb, there's Jason Sansoni. You mentioned James Lavish, ex-hedge fund. There's Max from Germany, who is actually Saifedean's video content producer. There's a beautiful lady from South America, beautiful in all respects, just a big heart, just a solid global citizen. She's from South America. We have Daz Bea in Australia, in the outback of Australia, producing content. And I think that's it. That's the 7 people, all right, including myself. And we all do this for free. And I'm just proud to be part of it, to have a resource where people can go and get an alternative viewpoint over the stuff they teach you in school. Because if they taught you that it was a fiat Ponzi in school, you'd be loath to leave your money in a bank, because you know that those bank deposits are nowhere near as secure as they want you to believe, okay? And therefore, it would be detrimental to continuing the fiat experiment. And it's not an experiment. It is a way of life for thousands of years. But every fiat fails, okay? That is what history teaches you. Every single fiat fails. I don't want the U.S. dollar to fail. The USA is still the greatest country in the world, bastion of freedom, global economic superpower, free people, solid people. I want the USA to maintain its top position in the world. I think it's much better for the USA to do that in concert with Bitcoin, not as Charlie Munger wants to paint a communist type of solution for the USA. That is not the solution. I am no Charlie Munger, but guess what? I'm just going to tell the truth as I see it, and I got to call out these people who are actually not working in the best interests of the USA as I see it, okay? So these 6 people, 7 outside of me, 7 including me, global effort, education. Bitcoin is the solution, but we don't lead, all paths lead to Bitcoin, but we don't tell people you have to own Bitcoin. We'll let them make that choice. The solution is this, Kev. If you own 0 Bitcoin, though, you are taking more risk than if you own a proper allocation. It's up to you to determine what that allocation is, but get yourself up to 5%. That's a minimum, in my opinion. But you don't have to be at 100%. I'm not at 100%. That's not how you manage risk. But by owning 0, you actually are taking substantial amount of risk compared to if you own 5%. So dollar cost average into Bitcoin, pass it to your children. We'll talk in 20 years. Don't overthink this. We have a big week coming up, FOMC. They're not going to get close to raising interest rates 9 times, in my opinion. That will cause the world to go kaboom. They won't, but they're going to put their foot on the brake. There's going to be some ugliness in the markets. Stay disciplined. Stay honest. Thank you for having me. You are an inspiration to me. You're an inspiration to me, okay? I love what you're doing, buddy. And let me know how I can help expand your reach as well, okay?